guys, welcome back to a brand new video. I'm RexFinance, and can anything stop the stock market rally? Because over the past couple of months, the S&P 500 is up by more than 17%. The NASDAQ beats that, and that is up almost 22.5%. And small caps, the IWM over the past couple of months is leading all of these indices up 22.63%. And let me remind you, anything over 20% is considered a bull market. So the NASDAQ right now and small caps are in a bull market. The S&P 500 is not far behind. It just needs another couple percentage points in order to meet that bull market requirement. And this huge rally that's taken place just over the past 60 days, essentially, is coming on the heels of loads of economic and financial data. And most of this data that I'm scrolling through on the screen right now, the results were bad, where you would expect the stock market to go down when a lot of this data was released, but obviously the opposite has happened. NASDAQ up 22.5%. And there's basically two trains of thought out there right now. The first being you believe this is a bull market within a new bear market that started in late 2021. The other train of thought is that the time period from late 2021 up until June of 2022 was just a small bear market inside of a prolonged bull market. Those are two very different viewpoints, but there's one thing in common that people from both groups agree on. Most people right now agree that this rally the stock market has been seeing is unsustainable. So does that mean we should be selling out of our stocks and investments in anticipation of the stock market cooling off? Well, that's what I'm going to be discussing in today's video. But if you guys are new here or returning and not yet subscribed, I'd greatly appreciate that subscribe button down below. Also consider joining my membership. I have yet to have anybody ask for a refund if that's a tiebreaker. I guarantee you will find value, and if you don't, I will refund you up to your first month. Without further ado, let's get into the good stuff. Meet Kevin recently ran a poll on his Twitter account, and it received 14,742 votes. And in this poll, almost 58% of people said that this is just a bear market rally. People expect, after this rally ends, for the stock market to go back to new lows, to go to levels we haven't seen yet. But only 42% of people think that stocks have bottomed in June. And of that 42%, as I already discussed, most of those people also agree that this current rally we've been experiencing is going to cool off. And I have to say, I agree with that thought process. This rally, 22% in 60 days, is unsustainable. And as I've mentioned on this channel many times in the past, specifically over the past couple of months when the stock market was at the rock bottom, the stock market is always doing its best to price in any future catalyst or event that it sees based on its own expectations. And in doing so, the stock market always overreacts. Every reaction in the stock market is an overreaction, whether that be to the downside like we saw in June, or whether that be to the upside like maybe we're seeing now. It's always an overreaction. But the problem with this thought process of trying to sell out of your investments now in hopes to buy back in lower after the NASDAQ or the S&P 500 or just the stock market in general cools off is that nobody knows when the stock market's going to cool off. The NASDAQ is already up over 20%, and lots of people have yet to buy back into this market because they believe, according to Meet Kevin's poll on Twitter, that the stock market has yet to see its lowest point. So is the stock market going to cool off after it's up 25%, 30%, 40%, maybe even 50%? Nobody knows. Your guess is as good as mine. And that's the issue with this thought process. Because if you choose to sell out now and try and time out this play, and the stock market goes up another 20%, that is a 20% gain in an index and likely another 50% gain in a lot of our individual retail stocks that you have missed out on. Now, there's this common consensus in the stock market that things need to go back down and things have to go back down. Well, in the stock market, nothing ever needs to happen and nothing ever has to happen. And typically, whenever you hear those sorts of words coming out of the mouths of investors, the mouths of the hosts on CNBC, the mouths of the YouTubers out there, typically those things don't ever end up happening. And the reason for that is if investors are saying things need to go lower, It likely means investors are already well aware of all of the issues our economy is seeing and all of the issues that the market might have. So as a result of that knowledge, investors have already preemptively priced in all of that negative price action, which is why when people say things need to go lower, typically, they don't go much lower. And this is why, in my personal opinion, if you're looking for the stock market to hit new lows altogether, we're going to need some sort of new bad news. Whether that's oil going up to $130 per barrel, maybe it's more countries joining the Russia-Ukraine conflict, maybe it's a reacceleration of inflation. But right now, as it stands, there are so many negative catalysts that have been priced into the stock market, which is why based on whatever economic data that's come out that has been negative, the stock market continues to hum higher and higher and higher. And as I already mentioned previously in this video, there are a lot of investors out there that have yet to buy back into the stock market. They sold out in fear, and they have yet to hit that buy button again because they think things are going to go lower and lower and lower. Well, if we look at some of the popular retail stocks out there, starting with Palantir, we'll see Palantir is up 45% from its lows that it set on May 11th. Tesla's up 46.5% from the lows it set on May 24th. And CleanSpark is up 41%. This is a popular stock I follow on this YouTube channel since the lows it set on July 1st. These are 40% returns that most retail investors have missed out on because, trust me, these sorts of returns aren't limited to these three stocks I'm covering in this video. This is broad. This is almost any popular retail stock out there. Lots of stocks have returned 40, 50, 60, even 70% in some cases from their lows. And these are returns that investors have missed out on. So even if the market indices do dip back down, I find it extremely unlikely that you're going to find new all-time lows in these popular retail investor stocks again. 40% return is a lot in a short amount of time, and it's going to be even harder to get those people that have bought over the past couple of months to sell out again, because the people that have bought over the last couple of months are the smart money. They're the smart investors that have been buying when things are low. They're going to have diamond hands. They're the type of investors that want to hold on to any investment they make for years to go into the future. It's not going to be easy to get these investors to sell out of the new shares that they have already purchased. And I do have to say, those same people that have yet to hit the buy button again are going to be the same people that don't hit the buy button if the stock market does take a breather here in the short term. They're the same people that are going to be saying, this hasn't gone low enough yet. It needs to cool off more. Things have to go lower. Things need to go lower. But again, in the stock market, those are very, very dangerous words. Things don't have to happen. Things don't need to happen in the stock market. And the bottom line is if you're sitting on your hands right now, you're probably going to miss out on generational returns for your portfolio. Right now, there is no disputing. Things are at a strong discount in the stock market, basically no matter what you're buying. If we go look at some data from Yardeni Research that depicts all of the different average valuations over the past 23 years in the stock market, we'll see that most everything is still at a significant discount. Now, yes, over the past couple of months, these average valuations have gone back up, but you'll see specifically with small caps, we're sitting at 12.8, which is historically low, which is still lower than we've seen other than 2 times over the past 23 years. And one of those times was during the COVID crash of 2020, and the other time was during the financial crisis of 2008 and 2009. In both of those events, our financial system, our global economy was on the brink of catastrophe. I, for one, don't believe now is a scenario anything like that. Mid caps are very similar, where yes, they've recovered to an average forward PE of 13.2, but that is still very, very historically low, meaning we are getting very good deals on most mid-cap companies out there. Large caps, on the other hand, they're not nearly as undervalued as the small caps and mid caps are, but they are still in value territory. For the longest time, large cap valuations were not coming back down to earth, but they finally did towards the beginning and throughout the first half of 2022. And right now, the average forward PE for the S&P 500 large cap companies is 18.1, which is about average going back over the past 23 years. So with large caps, there are some deals that you're probably not going to want to make, but there are also some deals in the large caps that maybe are screaming buys right now. In any case, in any category, small cap, mid cap, or large cap, we are getting valuations that we have not seen hardly at all in history. With small caps and mid caps, we've had 2 other chances in the past 23 years to take advantage of deals like we're seeing today. So no matter what happens, right now, when we look back on this time period in a couple of years, we're going to look back and look on this time period as one of the best buying opportunities, perhaps of our lifetimes. And I don't know about you, I don't want to be sitting on my hands during a time period like that. So that's why I've been deploying as much capital as I can into buying stocks and making different sorts of investments. If you're curious about a few of the stocks I've been buying lately, go click the eye in the top right-hand corner. I made a video going through 3 stocks that I am buying for the month of August. That'll give you a great breakdown of what I am looking for and what I am targeting. Even if you're not interested in the 3 exact stocks I mentioned in that video, you're going to get value out of that video. You'll get a good idea of what I am trying to buy in this current environment. If you guys enjoyed this video, please hit that like button down below. And again, if you guys are new here or returning and not yet subscribed, I'd greatly appreciate that subscribe button. With that, have a great rest of your day. Stay blessed. I'll be back with a brand new video later this week. Peace out.